The geopolitical chessboard just exploded. While we were celebrating the new year, President Trump launched a lightning strike to arrest Nicolas Maduro and seize control of the world's largest oil reserves. Monday's market open is going to be historic. Is this the end of OPEC or the start of a global energy war? Today, we're looking at the 5 stocks you need to buy right now and why gold is your ultimate insurance. Let's dive in. The world woke up on January 4th, 2026, to a reality that sounds like a Hollywood thriller, but the consequences for your bank account are very, very real. While most were still recovering from the New Year's celebrations, the geopolitical chessboard was flipped upside down. In a lightning-fast military strike dubbed Operation Absolute Resolve, U.S. Delta Force units, supported by overwhelming air superiority, descended on Caracas. The result? Nicolas Maduro is in custody, currently being flown to New York to face trial. But let's look past the headlines. For us as investors, the real story isn't the arrest, it's the oil. We are talking about the largest proven crude oil reserves on the planet, over 300 billion barrels. To put that in perspective, that is more than Saudi Arabia, more than Russia. And as of this weekend, Donald Trump has effectively placed these reserves under provisional U.S. management. Tomorrow, Monday, January 5th, the markets will open. I am telling you right now, this will be the most volatile opening bell we have seen in a decade. Today, we are breaking down the Venezuela play. We'll look at why the OPEC cartel is screaming in private, which 5 specific stocks are positioned to double, and how this move might just be the black swan event that kills inflation or starts a trade war like no other. If you have $1 in the market, you cannot afford to miss this. Before we dive into the ticker symbols, we have to talk about the Trump factor. There is a chilling historical symmetry at play here. Maduro was captured on January 3rd, the exact same date that U.S. forces arrested Panamanian dictator Manuel Noriega 36 years ago. This isn't a coincidence, it's a message. Trump is signaling a return to the Monroe Doctrine, but with a 21st century financial twist. The White House has already released a statement. The energy belongs to the people and the markets will be set free. What does set free mean in billionaire speak? It means the end of the Venezuelan oil embargo and the immediate entry of American engineering to fix a dying infrastructure. For years, Venezuela's production has been a ghost of its former self, crumbling under mismanagement. But the oil is still there. It's heavy, it's sour, and it's exactly what the massive refineries on the U.S. Gulf Coast were built to process. This isn't just a regime change, it's a hostile takeover of the global energy supply chain. Now, let's talk about the oil war. For years, OPEC and its allies have used production cuts to keep prices artificially high. They thought they held the cards. But with Venezuela's 300 billion barrels now essentially under a U.S. security umbrella, the math changes overnight. If the U.S. restarts Venezuelan production at scale, which analysts suggest could reach 2 to 3 million barrels per day within 18 months, the global supply glut will be massive. We are looking at a potential collapse of Brent crude toward the $40 mark. This would be a death blow to the budgets of rival oil states, but a massive tax cut for the American consumer. If you are holding energy stocks right now, you are likely panicking. But you shouldn't be. You just need to be holding the right ones. The drillers who were banned from Venezuela for 20 years are now the ones holding the keys to the kingdom. We are moving from a world of scarcity to a world of state-sponsored abundance, and the wealth transfer is going to be tectonic. When the clock strikes 9:30 a.m. in New York tomorrow, expect a bloodbath in some sectors and a moonshot in others. The Fear Index, or VIX, is already spiking in Sunday's pre-market futures, but smart money isn't looking at the chaos, they are looking at the logistics. Who owns the tankers? Who owns the pipelines? Who has the legal contracts already signed and waiting in a drawer since the last administration? In the next segment, we are going to name names. We are going to look at the big 3 oil majors that have the most to gain, and one dark horse small-cap stock that provides the specialized chemicals needed to extract Venezuela's heavy sludge. This is the new gold rush. Only this time, the gold is black, and it's protected by the 82nd Airborne. Stay tuned because the numbers we are about to show you will change the way you look at your portfolio for the rest of 2026. If you want to know where the money is flowing on Monday morning, you have to look at the companies with historical baggage in Venezuela. We aren't just talking about new contracts, we are talking about restitution. First, let's talk about Chevron, CVX. While every other American major was kicked out years ago, Chevron managed to keep a toehold through a debt-for-oil deal. They are currently producing around 200,000 barrels a day in joint ventures. But here's the kicker. Chevron is the only company with the boots on the ground, the infrastructure already in place, and the maps of the wells ready to go. Analysts expect Chevron to be the primary administrator of the transition. They aren't just an oil company anymore. In the eyes of the Trump administration, they are a strategic asset. If sanctions are lifted by executive order this week, Chevron's production could double in months, not years. Then there is ConocoPhillips, COP. This is the ultimate revenge trade. Back in the 2000s, the Venezuelan government illegally seized Conoco's assets. Conoco didn't just walk away, they sued, and they won a $10 billion judgment that Venezuela has never paid. With Maduro in handcuffs, ConocoPhillips is at the front of the line. There is massive speculation that they will be granted new, high-yield drilling rights as a form of restitution for their stolen billions. This isn't just a growth play, it's a massive balance sheet recovery that the market hasn't fully priced in yet. But as any veteran oil investor knows, you can't just turn a key and watch the oil flow. Venezuela's infrastructure is a graveyard of rusted pipes and clogged wells. To fix this, you don't call an oil driller, you call the oil field medics. Enter SLB, formerly Schlumberger, and Halliburton, HAL. Think of SLB as the high-tech brain. They possess proprietary satellite and seismic technology that can see through the earth to find the remaining sweet spots in the Orinoco belt that the Maduro regime was too incompetent to find. They map the field, they plan the extraction, they are the essential technology partner for any recovery. Halliburton, on the other hand, is the muscle. They already have a legacy footprint in Venezuela. They are the ones who will be hired to repair thousands of miles of decaying pipelines and fix the broken pumps. Trump's plan to rebuild the infrastructure is essentially a giant stimulus package for Halliburton. Because these companies are service providers, they win regardless of whether the price of oil is $40 or $100. They get paid to build, and right now Venezuela is the biggest construction site on Earth. Now, while the oil markets are looking at a supply glut, there is another asset class that is behaving very differently: gold. You might think that a successful U.S. military operation would strengthen the dollar and weaken gold. But look at the history of the last 48 hours. Gold prices have been surging to all-time highs, with major banks like Goldman Sachs and J.P. Morgan now forecasting a push toward $5,000 per ounce in 2026. Why? Geopolitics. The arrest of a head of state by U.S. forces is a massive systemic shock. While the U.S. celebrates, rivals like China and Russia are calling this an act of piracy. We are seeing a massive flight to safety. Central banks, particularly in the global south, are terrified of keeping their reserves in dollars if those dollars can be deactivated or if their leaders can be arrested. Furthermore, the scale of the investment needed for Venezuela, estimated at over $100 billion, is going to require massive credit expansion. In an era of high debt and geopolitical fragmentation, gold is the only neutral currency left. If you are playing the Venezuela trade with oil stocks, you must hedge that volatility with gold. It is the financial insurance for a world where the old rules of international law have just been torn up. Before the opening bell on Monday, January 5th, here is your checklist. Watch the dollar index, DXY. If it spikes, gold might dip briefly. That is your buying opportunity. Monitor the Chevron gap. If CVX opens up more than 5%, look for the laggards like SLB or HAL that usually follow the majors. Keep an eye on the tanker stocks. If Trump announces an end to the blockade, the companies that own the VLCCs, very large crude carriers, will be the unsung winners. The world just changed. The peace dividend is gone and the energy war has begun. In the next segment, we are going to look at the dark horse stocks, the small-cap companies you've never heard of that own the specialized chemicals needed to process Venezuela's heavy sludge. Don't go anywhere. When the markets open tomorrow, all eyes will be on the tickers CVX and COP. These aren't just energy stocks anymore. They are the primary vehicles for the Trump administration's plan to rebuild Venezuela. Let's start with Chevron, CVX. Chevron is in a league of its own. While other American majors were forced out years ago, Chevron managed to maintain a strategic presence through a unique debt-for-oil license. They already have boots on the ground, joint ventures in place, and, most importantly, the most up-to-date seismic data on the Orinoco Belt. Trump has already signaled that Chevron will be the lead architect in ramping up production. We aren't just talking about steady growth. We are talking about a company that could potentially manage an additional 1 to 2 million barrels of daily production over the next few years. In a world of oversupply, Chevron wins because it will have the lowest cost access to the world's largest reserves. Then you have ConocoPhillips, COP. This is the revenge trade of the century. After having billions of dollars in assets illegally seized by the Venezuelan government in the 2000s, ConocoPhillips has been fighting in international courts for decades. Now, with the Maduro regime dismantled, Conoco is at the front of the line for restitution. There is high-level speculation that the U.S. will grant ConocoPhillips massive new concessions as a direct settlement for their multi-billion-dollar legal claims. This is a massive, hidden asset that the market hasn't priced in yet. While the oil price might face downward pressure, Conoco's equity value could skyrocket as they reclaim their lost empire. But you can't pump oil if the pipes are rusted through and the wells are clogged. This is where the service giants come in, SLB, formerly Schlumberger, and Halliburton, HAL. Venezuela's oil industry is currently a graveyard of decaying infrastructure. Rebuilding it to reach Trump's goal of 4 million barrels per day will require an estimated $100 billion in investment over the next decade. Who gets that money? The service companies. SLB is the high-tech brain. They possess the proprietary AI and subsurface imaging technology needed to modernize Venezuela's ancient fields. They don't take the commodity risk of oil prices. They get paid for their expertise in tech. Halliburton, on the other hand, is the muscle. They are the kings of North American fracking and heavy oil extraction. They have the hardware and the logistics to rebuild thousands of miles of pipelines. If Trump wants Made in America companies to fix Venezuela, Halliburton is his first phone call. For investors, these two companies represent a toll booth on every barrel of oil that will eventually flow out of Caracas. They win as long as the work is being done, regardless of where the price of oil settles. Now let's pivot to the most surprising move of the weekend. While many expected the US dollar to crush everything in its path, gold GC is actually stealing the show. As we speak, spot gold is testing historic resistance levels, with some analysts at Hana Securities and others predicting a break above $4,500 per ounce in the immediate term. Why is gold rising when the U.S. just scored a military victory? First, geopolitical uncertainty. The arrest of a head of state, regardless of the justification, is a massive shock to the international system. It signals a move away from diplomacy and toward action. This makes central banks around the world, especially in the global south, very nervous about holding only Western currencies. They are buying gold as the ultimate neutral reserve asset. Second, the inflation paradox. While Trump's plan to flood the market with Venezuelan oil is deflationary for gas prices, the cost of this operation and the subsequent rebuilding of a nation will require massive amounts of capital. We are entering a period of high-stakes macro. Gold has already surged nearly 70% over the last year. It is no longer just a fear trade, it is a structural hedge against a world that is becoming more fragmented. If the Monday morning open sees a 5 to 10% correction in the S&P 500 due to event-driven anxiety, gold will be the lighthouse in the storm. If you are going heavy on oil stocks, you must have a percentage of your portfolio in physical gold or miners like Newmont to balance the scales. We are less than 24 hours away from one of the most significant market opens in history. The Venezuela trade is not a one-day event. It is a multi-year shift in the global power dynamic. As you prepare your orders for Monday morning, remember, Chevron CVX is your stability play, ConocoPhillips KOP is your restitution play, SLB and Halliburton are your infrastructure plays, gold is your survival play. In our final segment, we will look at the dark horse losers, the countries and sectors that are about to be crushed by this new American energy dominance. Don't place a single trade until you hear the last part of this analysis. While American boardrooms are celebrating, there is a somber mood in Riyadh and Moscow. The arrest of Nicolas Maduro and the U.S. seizure of Venezuelan oil infrastructure is a direct existential threat to the OPEC Plus cartel. For years, OPEC has maintained its power through artificial scarcity, cutting production to keep prices high. But that game only works if you control the majority of the world's supply. With Venezuela's 300 billion barrels now effectively moving into the U.S. sphere of influence, OPEC has lost its leverage. President Trump has made it clear he wants $40 oil to kill inflation and supercharge the American economy. If the U.S. ignores OPEC quotas and floods the market with Venezuelan crude, the cartel faces two choices: cut even more and lose market share, or enter a suicidal price war. Analysts are already predicting that Brent crude could crash toward the $40 to $50 range by mid-2026. This is the great energy reset, and the old guard is on the losing side. The financial shockwaves won't stop at the gas pump. Let's talk about the geopolitical losers. First, Russia. The Kremlin relies on oil prices staying above $60 to fund its budget. If Trump successfully drives prices down to $45, Russia's economy enters a state of permanent crisis. Second, Iran. Tehran is already facing a massive fiscal deficit. They need oil at $160 just to balance their budget. Cheap Venezuelan oil flowing to U.S. refineries means less demand for sanctioned Iranian barrels, further choking their economy. And then there is China. For the last few years, China has been the biggest buyer of Venezuelan oil, often at a steep discount. By taking control of Caracas, Trump has effectively cut off China's cheap energy source. This is a massive strategic blow to Beijing's energy security. As we move into Monday's trading session, watch for a sharp sell-off in emerging market currencies that are tied to oil exports. The petrodollar isn't dying, it's being weaponized. So, how do you play this historic moment? Here is the final Venezuela play summary for your portfolio. The infrastructure boom. As soon as the first U.S. engineers land in Caracas, Halliburton, HAL, and SLB will see their order books explode. They are the picks and shovels of this new gold rush. The equity recovery, ConocoPhillips, COP, is the high-reward play. Their $10 billion legal claim against Venezuela is now a collectible asset. If they are granted new drilling rights as a settlement, the stock could re-rate to levels we've never seen. The stability play, Chevron CVX remains the safest bet for long-term dividends. They have the relationship, the tech, and the direct line to the White House to dominate the region. The ultimate hedge, don't forget gold. In a world of military raids and economic warfare, physical gold is your insurance. If the Monday open is as chaotic as we expect, gold at $4,000 or $5,000 will no longer be a prediction, it will be reality. We are living through a pivot point in history. The events of January 3rd and 4th, 2026 have changed the rules of the game. For the first time in a generation, the United States is not just an energy producer, it is the global energy manager. Tomorrow morning at 9:30 a.m., when that bell rings on Wall Street, don't be a spectator. The Venezuela trade is here, and it is going to create a new generation of millionaires. My team and I will be monitoring the markets live throughout the day, so make sure you are subscribed with the notifications on. I'll be posting an emergency update if we see any massive shifts in the pre-market. The world is awash in oil, the dollar is being reasserted, and the energy map has been redrawn. The question is, are you positioned to profit? I'm Ali. This is your financial breakdown, and I'll see you at the opening bell. Stay sharp, stay informed, and I'll see you in the next one.